Well, just when you think you've seen everything in a market over the course of the year, 2025 has brought a lot of unusual situations. We got a nostalgic, old school, leading stock led rally in the US last night. The Dow was up almost 1%, outperforming the S&P 500 and the Nasdaq index, which are only up around a quarter to a third of a percent. And looking at the Dow, which is, as we know, only 30 stocks, the top 14 are all non-tech stocks. So the rally last night was really broadly based. It appears that investors, while they remain very wary of the sky-high valuations, in particular in AI-exposed stocks, still want to buy shares. And that's what they did last night. The leading stocks, Walmart, McDonald's, Merck, all of those consumer-related stocks led the market higher, and small cap stocks featured. The Russell 2000 was up 1.9%. So despite the fact that it's hard to find valuation based buying in the market, investors are still happy to buy the broader market. And that's what we saw in action last night. And that optimism relates quite clearly, in the US at least, to the potential for rate cuts. And that was reinforced last night with the ADP job numbers. Now, these are only secondary numbers and rarely get much attention. But in a sign of where market sentiment is sitting, a weak read on the ADP report, a loss of 32,000 jobs in November, further spurred speculation about a rate cut from the Federal Reserve next week. And the pricing in interest rate futures markets indicates a better than 90% probability of that 25 basis point reduction next week. And that was the spur for the broad-based buying. Even Bitcoin managed to rally overnight. It rallied up above 93,000 US dollars, well off those lows at 80,000. And the whole cryptocurrency complex went higher with it in that sign of renewed optimism across the board. Interestingly, gold prices also rallied, and we saw support for oil prices as well. So it was across the board. We saw support as clearly investors speculated about easier monetary conditions and lower interest rates. Locally, we had GDP data yesterday. Now, this one was tricky because overall, the annualized growth rate at 2.1% came in at just under expectations of 2.2% and higher than the previous reading of 2%, making it look like growth had accelerated. But when we drill into the data, that was not the case at all. In fact, growth slowed, and that quarterly reading of 0.4% was as bad as it looked. The only reason we got close to expectations for that annualized growth rate was revision of the previous quarters upward. And this fudge on the numbers obscured the fact that growth is actually slowing in Australia. And combined with the inflation data last week, sends another red flag for the Australian economy, because we've got rising prices and falling growth. And that, of course, is a formula for stagflation and very bad news for the outlook for company profits. So with no room for the RBA to move, given that high inflation read, these weak growth numbers could weigh on sentiment as they're digested by investors, something to watch out for. Overnight, we also saw good support for copper. The copper price has soared again, well over $5 a pound, and looking like it might approach the all-time highs that we saw in the market in the middle of last year. In LME terms, this is around $11,500 a tonne. That makes the price up 28% this year. And there are concerns about tightening global supply, and some fear that there'll be an introduction of US tariffs. Now, I think that one's a bit fanciful. Copper is essential to the electrification of economies, and whether we're talking about EVs or synchronous condensers or any other aspect of the electrification, copper is required. So we're looking at a huge increase in demand over the years as economies move that way, and demand could rise further if there are further cuts in the US to interest rates, as investors look to build out to support the new economy and its implied demand for copper. One to watch out for. So turning to our watch list, first up, we've got Sandfire, one of Australia's best-known copper miners. It's up almost 4% this week on news that it reached an agreement with a smaller producer called Havilah to boost their South Australian copper project. And with demand on the increase, good supplies are important. Now, Australia has 13% of the globe's discovered copper reserves, second only to Brazil with 25%. And so copper remains very important to the globe and to the Australian economy and to the ASX, because all of our majors and quite a lot of the miners are involved in copper production. So Sandfire are looking very good, up 77% year to date. It has a hold rating, but a number of brokers have a buy on the stock still, despite the fact that it's trading very close to all-time highs. One to watch out for. Glencore, which is listed in the US and has a 5-letter code if you're looking for it. Glencore is not trading at all-time highs because at this stage it's cutting production, but given its reserves and its global significance as a copper miner, might be worth putting on the watch list as well. In the US, Salesforce reported after market. It's trading higher in post-market trading. Third quarter results were strong in terms of earnings. Earnings per share of $3.25 was above forecast. Interestingly, though, they did it on revenue that was below forecast. And it does suggest that cost cutting was a major feature of this. They've given strong guidance for the next quarter and backed AI as a pickup. Some have a buy rating on this one in the Moomoo community. It is rated a buy, and the positive support we're seeing post that report could flow into trading tonight in the US. And finally, on our watch list today, Tesla. Tesla's up 4% after the market reports of an executive order from the president of the US around robots and the sale of humanoid robots. This executive order would make it easier for Tesla to sell their robots and protect the US sector. Perhaps more importantly, from Tesla's point of view, it shifts the narrative. The concerns about Tesla's electric vehicle business are very real. Its sales are in decline, and it doesn't look like it'll be the source of cash flow and revenue that many investors were looking for. This talk of potentially bringing robots into production as early as next year, which seems extraordinary given that we haven't even seen a working prototype yet. But nonetheless, the speculation that we'll be seeing robots in the market as early as next year has really supported Tesla's share price. Tesla up 14.5% year to date, to some degree underperforming the broader market, but nonetheless, positive momentum reappearing in Tesla's share price on the back of its move into humanoid robots.